Hello, everyone. How's everyone doing? Hello, Alexander. Who else is around? You guys see Aussie? Hi, Paul. Jace. Everyone doing all right? Okay, it's not Friday yet, is it?
Wish it
Hugo,
was.
how are you? Huh?
Wish it was. Morning, Dale.
Hey, how are you, Brian?
Okay,
All
mate,
right,
you?
so a little bit of a dollar rebound. It went right to the failure, and you cautioned that it could have just been month end dollar buying. What do you think? Think it
Yeah, it's a
is?
bit messy today. We saw euro get bid up yesterday. Now it's looking soggy. Aussie dollar looked like it was going to break. Now it's looking soggy. Euro sterling looking like it was breaking up. That's all the way back down again. It's all a bit of a mess. I hate this time of year. I hate these month ends and quarter ends. It just
Okay.
messes
Yeah.
things up, doesn't it?
Yeah. Well, my opinion is you get a pullback to 10.5 or so. You try it, and I think with yesterday's action now, if you wanted to bottom pick euro prior, you were wrong under 108.
Yeah.
Now, at least you can move it up. If you did any buying in here, you should be in at least a profit stop here. And if you're flat, I would try it down here. So, I would try it on a day where euro's not weaker than cable. If it was reversed right now, and cable and euro was approaching support and it was down 15 pips while cable was down 35, 40. You know what I mean? That kind of day.
Yeah. It's looking like a bit of a euro sell all round.
Yeah.
And cable's doing all right, if you know what I mean. Pound's doing okay. So it's a bit of a euro story, but like you say, if you're going to be looking to buy it, I'll be looking in the low 110s.
Yeah.
We've got some fairly decent options around 111, 112, 110. So, it's all about picking your levels, isn't it?
It's completely
120, 110, 20, 110 even. That's a sort of area I might have a little sniff at, see what happens over the fixes and stuff like that. But that zone up at sort of 111.70 to 112, that's an old S&R area going way back. So it's a level to be reckoned with. And if we see a few tests up there and it holds, but the price keeps coming back, I might be thinking about a break trade through 112 for a long and see where it goes from there.
Anything on Looney here? Here's a daily. It almost looks corrective, like, some kind of zigzag down here. And I see that there's some alarms down here around 124. You're starting to get the feeling that, there could be a pop here as, a little sogginess sets into Aussie. And maybe Aussie's a little bit under pressure because I don't know any more news in China besides Shanghai being shut down? Is it
a little bit
spreading?
Of weak data? Yeah, a little bit of weak data came out. So but it's not going far, Aussie dollar. It keeps coming off the highs around these 75.20 area, but it's not. It's going to need to break this sort of 60 area really, big time to get a stubborn push lower.
But even if it pulled back here, this would be a great entry for longs, right?
Yeah, well, if it gets under 74, 73.80, it's looking very bad. At the moment, it's a bit of a coin toss up here. Is it going to go up? Is it going to go down? I've been watching it, waiting. I've got some buy stops in, small buy stops, 74.55, I think, no, 74.45 and 74.60. If we do get a break up. But I'm long otherwise in my long-term trade. So, but if it gets under that 74.60, 50 area, we're heading down to 74, I think, and under there, as I say, it gets worse. But back to dollar CAD, I want to say well done to the guys and girls in the room yesterday. Really nailed it down into those lows. I'm happy to get on board as well, but we got a City call out saying they were short. looking for.
Oh, so you guys
22
just the
something.
room
So,
faded
yeah.
city, huh?
that was like gold.
Yeah.
That was a trigger. Pile in.
It's
Put a
like
farm in
Dennis
it.
Gartman,
Yeah.
right? I remember
But
Gartman.
great trading in the room. You know, it's fantastic
Yeah.
when you see, you know, lots of people all getting on the same trade, all riding the same train, and they're all taking profit. You know, it's magical. You know, that's what you want to see in the community.
Okay, Mike Delfino is still RL couldn't be being pulled down by the big option at 111. Could that be what's going on with the euro? There's a big option at 111.
Yeah, there's pretty much big options or decent size options from 110 through to 112. I mean, at 110 we've got 3 billion. At 111 we've got, I think, around 2 point something billion. And there's little billions here and there up to 112. So yeah, we might find we might find that we're gyrating around some of those option levels amongst the month ends, but you got to watch the hourly. You got to watch the clock every time it approaches an hour. You got to look out for if we get any fixed moves, because last day of the month. So it's all to play for, as they say.
Well, you know, tomorrow is April, and you know what that is?
April Fool's Day.
Besides April Fools,
Non-farm payroll day.
Yeah.
Anything else?
Your birthday?
No, someone else's birthday.
It's not. Is it F.A.C.E birthday? It April 1st.
It's April 1st.
Wow.
Happy birthday, F.A.C.E.
Is it what? 5 years?
6.
Is it 6?
No.
5.
6?
No, it's 5. Is
5,
it?
Blake?
I don't know.
Am I in kindergarten or
you pay attention to this
first
stuff.
grade?
It's like asking my wife, you know, how many years have we been married? I'm like, 20, and she's like 18.
Anyway,
crap.
Yeah. So you know,
congratulations.
Yeah.
You have to
awesome.
sing something, Dale, tomorrow.
Okay, I'll sing. April showers will bring May flowers. How's that?
Don't say that. We had snow earlier here.
Oh my God! You have to move, Ryan.
Oh, we never get snow down here on the south coast.
Okay, well, you still we're all going to move to paradise. Where's paradise? Is it Athens?
Mars.
The
way things are going, anywhere that's not on this planet.
All right, better buy some SpaceX then. All right, so
back on target, folks. So
go ahead.
I just want to jump in, and I want to say, I was, talking about, or I was just commenting to Amir in the chat room, like, hey, great trade on the dollar CAD. I unfortunately I was so busy yesterday, I didn't get a chance to look here. Let me grab the charts really quick.
Go ahead, buddy.
I just had the euro up right now, but let's go over to the dollar CAD. So we were pushing below this support right through here, and I'm like, man, that looks risky. And it was even before it broke down. I was like, man, it looks risky to be long. And then it started to push below, and then as Ryan pointed out, Citi just they announced it was short and just ripped higher. And
short of.
Yeah, so now we got a false breakdown, which is great if you're short, or excuse me, if you're short Canadian dollars, which is awesome. I'm actually long some Euro CAD, so I'm all about rooting for this thing going higher. But there's a big announcement yesterday with Biden announcing all this, the surplus. And I know K-Man was in the chat room when that announcement happened yesterday. I was in the middle of doing the trade-off, or preparing for the trade-off with the Pepperstone guys, and doing that show. And then all of a sudden I saw crude oil just absolutely getting crushed and just, getting destroyed. And that really just threw the Canadian in a tizzy lower. And then you also saw the Norwegian crown come under pressure. And then I have Rayful in the chat room told me, and I have to say this, he told me this about Norway. He says, and the Norges Bank announced earlier today that they will sell 2 billion crown every day in April. and biggest on record. Was expecting 250 million Norwegian krone or crown. I call it kroner. Whispers for 1 billion, so it was quite a surprise. So you can see Norway just getting to, and it's like a double whammy here for Norway. So then on top of that, you're going into month, quarter, year end, and you're seeing that the yen's moving. Look at this nice head and shoulder pattern setting up as we head into Japan's fiscal year end. That's called the middle finger pattern. Some of you might call that a different type of pattern. But you can call it whatever you want, but that's the dollar yen giving you the big finger. And actually, just in our chat room, Shoham just shared something that Goldman's looking for a move back down to 117 in the dollar yen. I found that kind of interesting. So lots of activity today, especially with these massive moves that we're seeing in the markets. So
isn't it great?
What's that?
It's our anniversary gift.
It is our anniversary.
Currency volatility.
Well, let's talk a little bit about the dollar. I mean, the dollar is, holding that 38% retracement. This is like, I know we've talked a lot about it, at least with the, ad nauseum with the ForexAnalytix community, how important this 38% retracement is. I even blogged about it actually earlier this week. Very important support here. And you can see how strong the dollar reacted off of that overnight. There's a multitude of reasons why the euro is under pressure today. Some of them having to do with like Mario Draghi even, but the fact of the matter is technically the dollar index, that really, I could call it a bull bear line, is really right here at 97.70. It's very important support for the market now. So, we have preliminary, estimates that because of the rally that we've seen in equities, you're going to see some dollar selling coming into the market by today. But what do you guys think about this end of the month, end of the quarter estimates that we're getting about dollar weakness? Obviously, dollar just ripped higher today. So, any thoughts here, you guys?
Take your pick. We've seen these models come out, and they look correct up to the exact last day of the month, and then it all goes haywire.
I'm not big on trying to trade end of month and end of quarter flows. Me particularly, I've been caught on the wrong side. When you think you've got, back when for the years that I traded with Gelos, give you a good example. They have a lot of good research that they get there, and I could pretty much pick research off from any bank at any time. And I used to just sit there and read it all and like, oh man, everybody is selling dollars today. And then I'd get bearish the dollar, position appropriately, and then next thing you know, I've got it up in my face by the end of the day, and I'm like, no one really knows. I try not to put too much credence into those reports now. It's more like just kind of trading what you see versus trading what you think is going to happen based on some sort of analyst report. But like I said, I think the dollar index is very clear as far as where support goes. And if you're into fading the dollar, I think you can do that. You just have to pick the right spot now. So if you look at it from just call it like a Fibonacci standpoint, I think any move back up towards 98.50, which is a 50% retracement right up into these levels, might offer some selling opportunities today. If you can get your shot to be short up there. What does that mean? That means maybe if the euro dips, as we come into North America and trade, and we dip down to like 110.70, might give you an opportunity to buy the euro cheaper if you think that the euro is eventually going higher, as Goldman thinks it's going to 117. 117. What do you have to say about that, Stelios? Is this going to allow you to travel now from the EU?
Well, I told you yesterday, I think, I know it's a bold statement, but I think we'll see 120 in euro dollar this year. What I do want to say, though, is I know we're talking about the dollar, but I want to mention the pound, because we had two things today. One was the final reading for GDP Q4. Came in quite a bit better than expected. Yes, it's a backward-looking number. It's for Q4 of 2021, but still it was better than expected. We got also house price index quite a bit better than expected. So this is all positive. Plus you have oil falling, which means that for European countries and the UK, this is good because remember, high energy price is a much bigger drag on these countries than say the US. And still cable is not up on the day. So that's worrying. You know, if you're long the pound, that is worrying. Euro pound is lower. So the pound is strengthening as the euro, but the euro is dropping pretty much everywhere. So this is a little bit worrying. If I was long the pound, I would definitely be cutting here because given what's happened so far, it's just not responding. And we do have payrolls tomorrow. Yes, that could really move things, but based on today's price action, I think it's looking a little bit weak for the pound. I don't know what you guys think.
Well, I just want to say, unless in the UK your house price has doubled in the last 2 years, I don't want to hear about house price index over there versus what's happening in the US. It's ridiculous. I mean, it is absolutely ridiculous. What's happening in housing. I know it's a global phenomenon, but and it doesn't really matter even for those of us that own homes, unless you're like selling your home because you need to move somewhere else. There's nowhere to go. I was talking to my I mentioned over the last couple of years I had a neighbor had up until yesterday. He's an ER doctor, right? And he moved from Minnesota, and he was flying back and forth to Mayo in Minnesota a couple times a month. His wife and 4 kids are here. They're my neighbor across the street. Anyway, they left because their kids they were renting. Now this is crazy. They were renting, and remember, it's a full family, right? They go over to a different side of town because their kids are had relocated schools to a school that they like better. Anyway, his rent had doubled in a year, 2 years, excuse me, doubled. Isn't that crazy,
Blake?
Yeah,
Blake, I've said that before, and perhaps people haven't realized what I'm saying, and this is real data. 1/3 of the measured CPI is based on rent prices, right? So we know that home prices within a year have climbed close to 20%, right? These are real data. Now, in one of the changes they made to the CPI, what was it, like close to 25, 30 years ago, was that instead of using, as they were using forever, rent prices, which is not that hard to find, right? I mean, the government was able to find them even many decades ago. They replaced rent prices, which I repeat, is 1/3 of the CPI, 1/3, 30% to be exact, 30, 31%, something like that. They changed it with what is called homes owners equivalent rent. So instead of taking rent prices from people that actually rent houses, right? They take the owner's equivalent rent, which is they go to owners and ask them how much they think they would pay if they were to rent the property they own. And based on that,
they're not going to charge themselves a lot.
Yeah, based on that, the last reading I had seen was 3.5%. Just imagine what the CPI would be. Let's take out of the equation everything else I've talked about, hedonic adjustments, substitutions. Just imagine what the CPI would be if you actually put back real rents for that 1/3 that represents the CPI.
Yeah, it would be out of control. It would be out of control. Anyway, hey,
how generous of the landlords to themselves.
But I want to say that housing is obviously an issue. And inflation inflationary pressures are obviously out of control too, and that's why you have to really factor that into the euro. I was looking at a schematic yesterday regarding central bank or an analyst. Oh, shoot, here, let me see if I can pull it up for you really quick. If you go into the ForexAnalytix chat room, you guys can see this is the chat room right now. K-Man just posted a chart on the dollar yen, but if you go over to the news and research room, yesterday I posted something on. Let me see here. Right here. This is a central bank forecast from what bank is it? Crap. Hold on. Where was it? But take a look at the ECB. What is expected into the end of 2022? One rate hike in December 15 is what this bank is anticipating. Do you really think that is going to be it? Do you think that the ECB is going? I mean, I know it's a big issue, right? It's like we got to fight either inflation or a really slow economy. I mean, what's the EU going to choose?
Just a reminder,
the Fed's choosing to raise rates, and they're raising rates and they don't care. And guess what? Who doesn't care? The stock market doesn't care either. But we got to talk about the stock market here in just a minute. I know you wanted to make a quick comment, Steve. Make it quick.
Yeah, just a reminder, the ECB supposedly has a single mandate, price stability. One, not a second one, right? And we currently have inflation in many of the countries, including Germany, at around 8%, and the ECB still has negative rates. I mean, what can you say, really?
Yeah, right. I mean, price stability, right? Well, stability, as Trichet used to say, the stability.
Stabilité. Yeah, price stabilité.
I can't use his French pronunciation as he used to. Anyway, but what I was going to say is, the ECB is going to end up finding themselves in a pickle here, and I think they're going to have to be a little bit more aggressive than they are. I want to talk a little bit about the S&Ps as we are coming into quarter end, and I was talking to Chris Weston from Pepperstone when I was doing the trade-off yesterday, last night actually, about the S&P, and I think it's a good short up here. Now, I'm going to let me give you my reasonings. First of all, I think the markets are up on hopes. I use quote hopes that that we're going to get a de-escalation of what's happening in Ukraine. Great, that the market has been very responsive to that idea just over the course of the last, I'm looking at a 4-hour chart. We're just talking over the last week, right? And the market has gone, technically, we've gone far enough, because I thought we were going to stop at the 200-day moving average. Obviously, it didn't. We got to the 200-day moving average, 4,500. And I said, we could stretch it all the way up to 4,600. You guys have probably heard me say that over the course of the last few weeks. We actually went beyond these highs. I didn't think we were going to do that, but it's enough to pierce the highs and give us a higher high versus a lower high. And that I was a little surprised about. Now, we've gone far enough to where it probably squeezed a lot of shorts out of the market. And, and let's just say, for argument's sake, what has happened in the Ukraine, it de-escalates by the weekend. Hopefully, you see Russian troops pull back a little bit, and it doesn't mean it's over. I'm just saying that, kind of, quiets down a little bit more, and everybody catches their breath. What is the world economy left with post Ukraine invasion of Russia? Higher prices pretty much globally, and really plaguing Europe with higher prices. And, if you just got finished moving your portfolio from the German DAX that you sold back into the DAX, back into the S&P, and reinvested. Now is it quite possible that you get caught wrong-footed up here? I think the S&P is a great short, especially if we drop back below 45.80 by the end of the day. We get a daily close back below this resistance zone, which is now a support zone. I think it's a great short up here. You guys have any thoughts about how you feel about stocks? And just, one of the other charts that I brought up last night on the trade-off is the DAX. I think the DAX had a big rejection of the 14,800 level, which has been multiple times the support, maybe 8-9 times over the course of the last year. We rejected the 618 retracement, trendline resistance,
horizontal. That's a big
horizontal. I mean, just all sorts of resistance up there. Yeah, Dale, it's big time rejection. Look, I think the S&P is a good short. What do you guys think up at these levels going into quarter end? Any thoughts?
I think you got to look at the rotations as usual. What's happening in bonds and how that's affecting stocks.
Rotation. So, elaborate on your thoughts there?
Well, it's as we've spoken about before. If at the moment there's a big shift out of bonds because central banks are hiking, it's the natural order of things. So, where's the money go for its returns now? Where's it going to get the yield? Stocks is one of them. We said about commodities, Bitcoin, you name it. The money's flowing. So right now, we're seeing easing of bond yields, US bond yields. We're down at 10s are down at 2.32% at the moment, coming off the highs of near 2.6. And the S&P has been fairly well supported. I thought it looked a bit blowy when we kept coming back to that 45.50 level, and obviously it did blow in the end. It's not going down just as yet though. But like you say, all you can do is trade the levels. Under that 45.90, I think was the stopping point on the way up. If you get under there, then it's looking bearish again, and then you look at the old level 45.50 and see what happens. But at the moment, we seem to be, 1 minute bond yields go up, then we see, stocks coming up again, and vice versa. It's like I said, for today, it's messy. I don't like trading days like today. I'll snipe a few levels that I
take the rest of the day off, Ryan.
No, I don't want to miss the action. Don't want to miss the action.
You're like that old dude that drives 35 in a 60-mile-per-hour zone. That's
no,
you.
I'm not.
That is not you. I'm talking about Ryan. You got a lead foot, Dale.
Yeah, Dale.
All right.
Anyway,
you're right.
Contrarian trade on the board. Buy bonds.
Thanks for your conservative views, Ryan. We really appreciate it. How about
so you ain't money?
How about Stelios? You got any ideas here? Better than Ryan's conservative ass?
The man.
If I have to take a view on stocks, I stand by what I said yesterday. I think that if we could be close to a resolution in Ukraine, and if that happens, stocks are gonna
sell them all.
They're gonna spike. So I don't want. I
sell it all.
Don't want to get in front of it. I had said 4600, right?
See, another one. They knows what I'm talking
about.
I'm not. I wouldn't get in front of it right now. But I am definitely. I do have a bias to short, but not just yet. I'm sorry.
Exactly.
I don't have the level yet.
You're like a 95-year-old Chinese grandma.
Yeah.
Like my Chinese grandma. Driving.
So what are you betting the farm on?
I want better ideas from K-Man. How about you, K-Man? Where's he? Where's K-Man today? Give me some ideas.
Listening. I'm just listening.
Hey, K-Man. How's it going?
Yeah, not too bad. Not too bad.
Hey, I was going to ask you, how'd you fare during the year-end moves in the yen? I mean,
yeah, it was pretty cool. The dollar yen went up 50-60 points in the run-up too, and then capped. Virtually, well, it hung around for quite a while, around 122.40, but it's a good cap up there, and then it came back off. So it was a pretty nice night.
And I love the setup in the dollar yen now. And we talked yesterday. ForexAnalytix traders, we're all talking about the importance of the 120-130. That's why you see multiple asterisks here yesterday. And the last 2 days have really respected that level. This is pretty important as far as yen goes. Now I saw the Goldman was looking at 117 in the months ahead, and Shohan actually shared that today in our chat room. Do you think that the dollar yen could get back down there? Do you like the yen?
I mean, it's a measured target if this is a head and shoulder. It's the measured target. If this is a head and shoulder and 121, 120 breaks and confirms the head and shoulder setup, It is 117 and a half.
That's not a head and shoulder pattern. I'm sorry to tell you.
Is it not?
No, this is we call it a middle finger pattern.
Oh, okay.
Yeah. If you ever come to the US and, somebody gives you a
All
middle finger,
right.
that's what it looks like. It's the middle finger
look like a
pattern
few things.
to bulls. All right. Hey, I just realized, and I did
That's
this.
saying buy bonds.
I did this yesterday, and I feel bad. I took away from Nargis's time. Do you have a guest here today, Dale?
Yeah, Patrick Kareen, but I don't see him. I'm looking for him.
Then let's keep talking while you're looking for him. All right, so K-Man,
Forex guest hunter.
What are you thinking here with the yen today? Are you have any ideas with the yen?
No, we need to respect the 121.30, right? And then the rest is month end of quarter, and then we'll see where we end up after the hour, and see where we end up today. There's a lot going on in bonds as well for the end of month, end of quarter. It's going to be a yo-yo, in my opinion, until tonight, and then we'll see tomorrow what happens. Really, if we are below 121.30 and we close the week below 121.30, then I think it's we might be in for a deeper correction.
We're seeing a move up right now. Did we just get data? GDP data?
Yeah, I just got data. The issue with yen is that Bank of Japan actually confirmed that they are going to buy more bonds in the next 3 months. So they put off their bonds JGB buying schedule, and they are actually going to buy more. So that makes me a little bit nervous about being really short dollar yen or yen pairs.
We've just had PCE out.
Okay, and that inflation data came in. What was the breakdown there?
6.4 versus 6.1 prior on PCE. The core was not as hot as expected, 5.4 versus 5.5 expected, prior 5.2% year on year.
Hence why stocks have come off or rallied.
The new definition of not that hot. Now we're looking at numbers.
I know.
Now we're looking at numbers that are 3 times
expectation terms.
Yeah,
of course, right. So I mean, you got to think about that.
Yeah.
All right. So we just had some data come out. That's why the S&P is kind of getting a little bit of a lift here. The dollar's coming under a little pressure. I don't know about you guys, but I was buying the euro below 111 today because if you're in the ForexAnalytix community, I tell everybody in the trades room kind of buying the euro down here. So I think that this is a decent value going into the end of the month and quarter. But I did sell my euro last night at 111.81. So if you want to hear, just so you guys, if you guys are, this is the trades room in the chat room. I'm just going to show you guys this. So last night
Patrick is here, Blake. Just like
he is. Okay.
Yeah,
so you can see last night I was exiting my euro at 111.83.50 is actually 111.84, and then I'm buying it back this morning. At the 111 level. I'll be updating my positions a little bit later. But if you want some good ideas in the ForexAnalytix community, just jump in there. Dale's person is here that he's going to be interviewing. So thanks for being here, everybody. Make sure that you register for the Trader Summit event. Remember, this is free, guys. Look at the list of speakers. There is somebody here for everybody. I mean, you if you want to talk macro, crypto, Fed, gold, technical analysis, trading strategies, and mentorship with Jack Schwager, who's the legend of interviewing some of the best traders ever on the face of the planet, trading coaches, you name it, they're all here. So this is a free event. It's taken a lot for us to put this together. I'm going to put a link in our chat box if no one has already. So there it is. Make sure you register because seating is limited.
It's like Woodstock.
It is like Woodstock.
So FinTwit Woodstock.
Don't forget our very first event that we had people that wanted to listen live and they clicked and they didn't have a seat. And that
didn't happen at Woodstock.
Fixed that with, our licensing, but that doesn't mean we can't run out because we only have a certain amount of seats that are available. So register today. All right. And then you'll get the recording too, even if you miss it, you know, but you have to register to get that because it's not going to be put up immediately.
Can I tell them that Carlos Santana is opening the summit?
As long as Carlos Santana has white hair like you, and yes,
He could still bend them, buddy.
yeah. Yeah. So
Bend them like
all right.
Beckham.
all right,
Yeah.
Dale. I'm sorry. I'm going to let you take over.
right.
Thanks everybody for being here today, and I'll see the ForexAnalytix subscribers. I'll see you guys in 40 minutes on the Morning Edge webinar. Thanks everyone.
Cheers, guys.
All right. Thanks, team.
Cheers.
Thank you, Steve, Ryan.
Thank you, Dale.
Del. And welcome back to F.A.C.E, Patrick. Great to have you here. I know you like these end of quarters for giving you some important signals. Welcome back, my trading warrior brother.
Thanks. Yeah, well, this is the timing's pretty insane because end of the month, end of the quarter. So for any big picture guys, look, even for not big picture guys, this is if there's one time you really should be paying attention is that these Q1, Q2, Q3 closes, right? And they're just there. Why not just look at them? They're in your face, and it's going to remove a lot of the noise. So if you ever want to do swing trading within those periods, at least try not to go against a trend, because those tidal waves, as defined by those quarterly close breakouts, they could pick up at any moment on the smaller time frames, and then you're not understanding why your swing trades are failing. It's because you're trying to go against those higher trends, and in the high trends, higher lows. So it's hard to go against that.
I'm a big picture guy, but I used to use a Polaroid camera. So anyway, Patrick, you want to share your screen here?
Yeah.
Because you didn't have to bring them in to be developed.
I never had a Polaroid. I don't know the feeling of.
Yeah, you just wave it in the air and it develops that way. Anyway, no, go back to that. What's that cartoon about, buddy?
These cartoons, I just found them so interesting. It's I think there was a book in 1913, or this guy did a book warning about the Fed and what it would mean if they would be able to manipulate the elasticity of the money supply. I forget the name of the book, and there's a whole series of cartoons, which is kind of relays to charts, right? Because if you do a picture, you could convey a lot more information, and it helps crystallize whatever message you want to pass. Same thing as a chart. And this is just these old pictures of the Wall Street and the bankers and how the government fits in there. It's
look at their ticker that goes into tickers like that.
And 100 years
behind
later,
the guy, the stock ticker.
It's still the same game today.
Yeah,
it's still the same game that's happening today. And until that changes, this is the system we have to deal with. So whatever there's manipulation, whatever you're not happy with, at the end of the day, if you want to play the game, you have to look at the charts and see where the actual money flows are going. And do
you think that we're going to be around for the end of the fractional reserve banking system?
Look, that's the most awesome of the questions. And I looked at long-term charts, and I have scenarios where this could really outlast our wildest expectations. You look at the Turkish lira charts, all these currencies where you say, man, they keep adding zeros. Like in the day it happens, look, they can't add anymore. They have to reset. I'm sorry, I'll just add a zero. And I think it's when the wages distance, the minimum wage or the gross domestic income gets really, really outpaced by inflation. That's when you have some type of reset, because people that have the pitchforks, the politicians, they can't win at the polls or whatever. But as long as they keep adding zeros, because look at these numbers here you see on that screen, like it's the same game.
That was a lot back then. Yeah,
that was a lot back then, but the system's still there. And I'm sure in the 1950s, people say, it can't last, in the 70s, 80s. So as long as the wages keep going up and the people could keep feeding themselves, the system's going to keep going.
That's a great point. You can't, you have a hungry population. That's it. So, and what's ironic is what may bring really the heaviest pressure on it is what's happening in agriculture. rather than financial markets, because if there are these, and there are, major supply shortages, disruptions. I saw interviews of wheat farmers who said, you know, it's just so dry in Kansas, they can't even plant. And the ones that can fertilizes so much that even at $15 wheat, they can't make money. We're going to have a major problem with, you know, they talk about tightening our belts. We're going to need one to hold up our pants. I mean, I could use losing 15 pounds, but I think food security is really going to become a buzzword in the next couple of years.
Yeah.
What do you think?
I was looking at some inflation charts, but long picture, like for a whole bunch of countries, I was going through that. And even before all this, like everything's financialized or computerized or everything's linked, the inflation rate back in the US, Canada, Great Britain, even in the 60s or 70s, everything was tracking each other. And because the food prices, if they go up for everybody. It's worldwide. It's like, even if we think that everything's globalized today, I think it's always been globalized to a certain extent. And man, I was looking just today at the sugar charts. The prices were so far off the 1974 peaks in sugar. We had like, I could show you the chart.
Go ahead. Well, they got to what, 60 cents?
Yeah, exactly. So I had like 60.
What a memory.
65. Like I had a peak, and I was just looking at this chart. Look at that. Look in the 70s. Our sugar 60.
So it's still embryonic, even though it's just started.
Exactly.
Even though it had a huge advance from, I remember it in the 6s and 5s, and you know, some of the moves we had. The grains have even been more dramatic. Cotton. It's, you know, you go across the board, and that's why I want to talk to you. And you know, before I go any further, I know I was going to bring this up at the beginning when I introduced you, Patrick, but great call on gold when I was on your broadcast. I was looking for higher numbers in the dollar, which manifested, but you and Kevin said, well, Dale, can't gold and the dollar go up together? And at that time, I was wrong. You guys were spot on. You had that huge run in, you know, silver from 21.30 to 27, and big moves in gold. Gold outperformed. Nice work, Patrick.
It's one thing I've learned is that I know nothing. And sometimes and again, guys, you got to take a step back, because, the DXY, let's say you just live, you're a new trader, and for the past year or 2 years, there's a correlation. Every day you look at the ticker, you see DXY go up, gold goes down. But those correlations, if you zoom back out, there's periods where for years, the gold and the DXY, this is a little trick I do, the gold and the DXY went up together. So to just look at one piece of evidence and not new.
Thanks for mentoring me.
Well, look, it's
true.
You just need to be curious, guys. Look at this period. So here's the DXY and gold going up together for this in 2005 to 2000. And there's a whole bunch of periods like that where they, even here off the lows, they went up 2000, and here, look right here towards since something like even here, everybody thought the DXY is going up, gold should be going down, but it actually went like $200-$300 up.
Yeah. What's your take, as long as we're on this chart of this little double top here? To me, it looks like we really have to hold that 1880 level on a shorter term chart, which it did this week. You know, if you look at a daily, that was a real important part of it. You're looking at monthly, but 1880 is a very, that's 1980. There you go. So those lows that we have here, you know, if they take those out, I think if you're a gold bull, that's where you can trail your stop up to now.
Yeah. For swing traders, you don't want to, you had that wick. Yeah. And now it's moving back up. So essentially, for a swing trader, definitely you could put your sell stop here. It's a wall, also important. What a wall I call a wall is previous resistance turn support, or support turn resistance. And right here, you see This used to be resistance, now support, support breakdown. So now it's resistance, resistance, broke out here. So this is critical. This is a very meaningful. So that's the market telling you, 175, that whole range here. It's like it's a
make or break for the bullish scenario.
Well, for that time frame, right? And so you want for the higher time frames to keep going up, you still need help from the smaller time frames, and you need more smaller time frames upswings to keep building up. So the weekly looks bullish, then the monthly looks bullish. But you definitely want this to hold. And on the monthly, I know a whole bunch of people told me that wick's ugly. Yeah. So I'm just hoping today we get to chew a little bit on this to make this wick a little bit less ugly.
Yeah.
It is a monthly confirmed breakout also here. If you consider this the base,
right
here, you could have had a breakout.
Right.
I'll go on the quarterly. Look, this is pretty insane. So let's see what happens today. But this could be the highest quarterly close ever for gold, ever.
Great point.
And this is a huge, huge signal, guys, right here. And I put the gold futures, and I also put spot because there's a little bit of different. Oh, Jesus, what do I do? XAU USD.
Do you pray when you trade? I just heard you use a light.
I sacrifice 3 sheep every morning. Make sure I have everything's aligned.
I love lamb chops, man. Anyway.
Yeah, it's okay to sacrifice, guys, but you have to eat the meat. Don't waste it.
Yeah.
So look, this is pretty meaningful right there. Look, and when I look at breakouts, I don't want it to be marginal and just be above. This has to be
strong
meaningful
close.
there.
Yeah.
So if it could close up $10, $20 today, guy, this is pretty sweet deal there as a continuation breakout, because this is a pull flag. Whoops, cancel. This is a pull flag. Patrick, let's make that line thicker. Text. Okay, there you go. So that's pretty much a pull flag that I would add on top of the breakout line or here. Yeah. So this brings us to, and what's fun about pull flags is the energy in, it gets like hammered down. And then as soon as the beach ball could go out, you can expect some type of trajectory, which gives you, and I know a lot of people, you can't predict in time, but TA, it can help you. So you could say probably in Q3 of next year, gold could be in this area right here, there. So around 2,500, 2,600 on a quarterly basis close. It doesn't mean it could probably overshoot on smaller time frames. So this could be a pathway here. It could even go below that line. I don't know where it's going to bounce, but this could be some type of roadmap. But this is what the market's telling you. If it can't make it close below that beautiful flag or pennant.
Yeah.
Oh, it'd be really awesome to chew on that wick though.
Silver look pretty similar, which looks like it's leading. The gold silver ratio, Patrick's been moving sideways for, I don't know, feels like months.
Yeah, I have something good on that though. So that's a big, I'll go on the daily because that's super scary there. What's happening here? You really want that to,
you don't want it to pop for a bull market in metals, right?
So this is what the
compression, if you draw a line, I mean, it's really compressing into a, kind of what they call that. Okay, it's outside the arc. Nice. Okay.
Log. Hold on, the arc. Wait, it's to stretch that.
Okay.
Patrick, you're just redrawing the arc. You're not allowed to redraw lines. What are you doing, Patrick? You're cheating.
It's against the law. It's wokeism.
There it is. So this 1, 2, 3. So we had that wick. So the arc, if it's meaningful, it's going to serve as resistance or the dome, because there's two pressures right now. There's the arc, the bigger overbearing arc, and on the smaller time frames, you have that dome creating pressure, but here you have an arc, so it's a battle. This wants to break out,
but that'll delay the bull market in metals.
Yeah, look right here, there. Even here, it's a meaningful pivot line, support, breakdown, support, resistance, and look how it just got sold into yesterday. was getting a whole bunch of hate mail and trolls. Yes, like when this happened this week, it's over, Pat. Give up.
Oh yeah. Let me ask you something, buddy. You laugh, so you have a good attitude. And most of the guys I know that are in the public domain have a good attitude. Does it ever bother you?
No, it makes me work harder because if somebody has a contrary opinion, you can't just say, "Oh, you're wrong." Okay, fine. Most of the time they don't even have charts. So, and okay, you have an opinion, you don't have a chart. So at least I need a chart. I need to know what time frame. What are you talking about? Because I understand with charts, it could be bullish on the daily, bearish on the weekly. You know how it goes. These are cycles, right? And they're fractals within fractals. But what I do is I go back to the drawing board and I try to see, okay, is there some resistance I didn't see? Is there some support I didn't see? Oh, look, did it break down? And I didn't see that there was a meaningful breakdown. Like here, even you can make a case that the gold silver ratio could have broke. You try to make a case where
you do technical analysis live very well.
Yeah,
I wanted to ask you. So let me ask you this. I mean, obviously you would favor a downside breakdown of that trend line.
Yeah, because there's
the upside. What do you think would happen to the price of silver if we break out to the upside and challenge the low 80 range?
If it goes up here, so silver is gonna crash. It's gonna melt. It's gonna have a lot of pressure.
Yeah,
you don't want
like $20 if that happens, huh?
Yeah, the correlation of this ratio, since silver is more volatile than gold, this is highly negatively correlated to the silver price. Historically, the gold silver ratio, it's practically silver that's moving this thing more than gold. And you gotta, if this moves to the upwards, that means there's it's a fight. It's
because that really wasn't much of a correction from that big break over 130. So I mean, it could rally and still be a bear. Yeah, see what I mean? It could go up
right here. Yeah, definitely.
Right.
Yeah, and that would imply, like you said, their silver price would definitely go down here. But that would be one of the greatest, best entries to enter.
July,
right here.
Patrick.
Yeah,
July.
Oh, look, I didn't see this line right here.
See how we learn when we do this? All right, so you have a view on the dollar. Could this be a time where the dollar is soft and peaking out here?
Yeah, so it
overshot my original target was like 96.5 when we were talking, but this looks complete to you, doesn't it?
Well, yeah, it looks like a tombstone. I was drawing that yesterday. I don't know what pattern that is. A diamond, those diamonds.
It looks like home plate for baseball season. Yeah, it's got a point on the base. Anyway, it looks like home plate. So. Yeah,
this is super stretched. The dollar could. We'll have to see by the end of the month if it could stay within here. There's a lot of clues though that this is below is a 7-year rate of change for the dollar. It gives you some indications on the momentum, right? So even if the price of the DXY could go up, it's not going up as fast as it used to. So right here, you see the rate of change is just plummeting. The rate of change is below its own 7-year EMA. So that's a bullish breakdown right here. And it's about to go negative. So that means whoever's holding US dollar today that owned it 7 years ago, right now they haven't made any money. They've lost all the gains that they had previously here. And every time we've had some of these peaks or we had a breakdown, it's like the momentum, it's hard to get out of there. Every time it crossed from bullish, let's do it here. The US dollars has been in a downward spiral. So you sell. This is an indication to sell the rallies. Does it mean the dollar is going to plummet to zero? Who knows? It depends of the euro and all the other ones in the basket. But it is telling you that you're less susceptible of having this crazy move upwards.
Yeah, interesting.
I see every time we went through below zero with the US dollar for about 5, 6, 7 years and went sideways. And coincidentally, in 2003, that's when silver really started heating up in commodities from 2003 to 2011. That's when silver really, really heated up.
Okay. All right. So quick look at WTI since we have this war going on? I'm curious what you and Kevin see there.
Yeah, that's a super, well, it was bullish chart. Now that wick is telling us that it's ready for a consolidation. And look, you can't even see people, oh, well, why is oil stopping? Well, look, it's starting to hit. This is like a blow off top here. 1, 2, 3. It's telling you that it's been, it's just waiting for an excuse to consolidate.
Yeah.
So what you want to do right now is, that's resistance. The market's telling you right now. So, okay, where's my support? So support is the wall. It's previous resistance. So this is not probably a natural pathway, is a pennant.
Yeah.
Or some type of flag above here where everybody thinks it's the end of the world. That you're still doing higher lows on the bigger time frame. See, right here. So if this ever goes here, it's great because you're resetting momentum. Everybody probably thinks inflation is done for, but look at that. There's another right here. This I would buy the insert a swear word right here.
I know what you're saying. I know what you're thinking. Back up the truck, you could say.
Back up the truck. Yeah, that's a nice way because look at the momentum, the 7-year rate of change.
Yeah, it's the opposite of the dollar.
It's going up. So the bull run in oil is probably going to be when the rate of change, okay, maybe not that high. Let's focus here. If ever you've made 400% by holding oil for 7 years, that means that's how much oil could get stretched before people say, okay, that's it, guys, I'm taking profits, or new supply comes on hand, like whatever narrative there is. But look, it's just starting. So there's a lot of fuel left. You could, of course, have huge drawdowns like we had here. Even here, we could actually be even here, Dale. Could have a huge drawdown like the early 2000s, maybe a global bust. But it's still bullish. You buy these opportunities. Look at that here. Look at a great buying opportunity. So this is in the cards. We'll find out. There's one catch to this. One caveat is the copper chart.
Are you bearish? Copper? Because I am.
Copper is looking pretty sweet.
Okay. Not even a pullback to 320 or something like that?
I think, look, it's bull flagging like it did in 2005, 3. It looks like the sugar chart. It's not giving, I don't think it wants to break out this month because now it's getting sold into, but it's not looking as bad as the oil chart, because copper had time to consolidate. This maybe we're going to expect this from oil right now. It's probably going to need 6 months, 8 months of a breather, right? But copper's already done that breather.
All right. How about S&Ps, Patrick? We'll wrap with that. Is this a failing rally in S&Ps, or are we going to new highs? That's $1 million question.
Well, I have an answer to that. Is right now, since we're in inflation period, I say nominally it's still possible it's going to go up. But if you measure it in a commodity, it will not.
Okay.
So, let's say,
or even if the dollar, and sometimes a weak dollar could be constructive for transnational stocks, et cetera, for exports. I don't know what we have to export, but
this thing could definitely melt up to some crazy levels, especially if it breaks out above. This is a bearish rising wedge. So this is very bearish as soon as it breaks below this lower trend line. But sometimes you see these moves where it blows up. Everybody thinks paradigm shift, and then it just comes crashing down. That's what happened with oil, like to the inverse, right?
Yeah.
A lot of commodity charts, it was the inverse of that happened. So that's definitely possible. But guys, you have to measure it in, let's measure in copper. Look at that. It's not as pretty. Measured in inflation and copper, look at that. Look at the S&P. It can't even beat. There's no U.S. equities that's beating copper since 2000. Think about that, guys. It's all an illusion.
Okay, I have a question. Patrick, these ROC charts are diverging against the price chart. Is that the way to read that?
The rate of change chart, the rate of change
diverging against the price chart.
Yeah.
I'm not sure what he means either.
Well, like let's say the price action can go up and the rate of change is still blowing up. yeah, you could use it as any type of indicator where you look for bearish divergence or bullish divergence. It works in the same way. So a trend will be intact as long as the indicator is able to do new highs while the price action does new high. That's great. But when you see huge divergence with any type of indicator, I could have put a blah, blah, blah indicator here. And if the indicator is showing that it's going higher, but the price action is not, that's a big warning sign. And at the end of the day, just rely on the price action itself. If it's doing a classical charting breakdown, like here, look, this is beautiful topping structure, breakdown, retest, very weak retest, can't even retest that breakdown line. That's all she wrote, man. And after that, look at that here. Even the rate of change, look how beautiful it broke down here.
Yeah.
Look, it's super weak, super. So now it's holding, it's hitting some support. So we have to wait to see how that plays out.
Okay.
But
well, thank you so much, Patrick, my trading warrior brother. Another great, great watching you do this live and showing your work. You and Kevin, I think, are elite technicians in my personal opinion.
That's very nice. But every day I learn, I keep practicing, and that's how it looks like maybe a lot, and I'm proficient, but it's just I'm a geek, and I just spend countless hours just doing these things. And
love it.
Anybody could do this. They just have to spend the time.
You love it. You love discovering these patterns that you may have been looking at the same chart, and like a month later you see something new, and it's like it's an art. It really is kind of an art, not a science. And you've got a great paintbrush. So I want to thank you, Patrick, for being here and sharing your views with us, and always rooting for you and Kevin that your next quarter is greener than this one.
That's so nice, Dale. Really appreciate that.
And the best way for people to follow you on Twitter at BadCharts1. And,
exactly.
And the name of your website again?
NorthStarBadCharts.com.
Okay. So follow the North Star to Kevin and Patrick, and you may find your way in the metals and other markets they cover. And
you're a poet, Dale. I'm super impressed.
Oh, well, it's just, something that I'm only the instrument. The spirit flows through me. And thank you, Patrick.
Thank you.
Good luck. And we'll get back together in the summer, see how things are shaping up. And again, thank you for having me on your show.
Yes. Thanks.
Alex is saying, get a room. Alex, I only go both ways on a mic. Okay. Just to clarify things to you. All right. So thank you, Patrick. Have a great weekend and a great quarter coming up.
Thanks. You too. Bye-bye.
All right. That's a wrap, everybody. Remember, don't just count your charts and trend lines, count your blessings. You could join the team in the Morning Edge, where you get the edge on the bias chart. So see everyone tomorrow for TGIF. Steve has a special guest. Adios, everyone. Thank you. Love you guys. Adios.